from Anglo-Sax. This is going to be my final series on the forecasts I've been putting forward for crude oil in 2024. And if you're new to this channel, please feel free to subscribe, drop me any comments. Also hit that like notification. It really helps the channel and just continues to inspire me to want to create these types of videos in the financial markets. So currently we're looking at a line chart. I'm just going to give a bit of an overview of what I've been forecasting, and then I'll drop down into some smaller time frames. I'll change the line graph to a candle graph, and I'll begin to break down what's happened and how I've been able to manage my trades in relation to my forecasts on this particular instrument. And hopefully you find lots of value out of this, and also it gives you some greater context into how to trade these financial markets. So first and foremost, what we have here is this area here, which is a high that we had in November, and then we had this real large displacement throughout November towards the beginning of December. So we got down to here, we had a pullback mid-December, beginning of December, and then we had one final drop before the price action started to move away from this low here. So we had this high and we had this low. But previously on crude oil, throughout the previous months, the market had been in a downtrend. Okay, so the market had been a downtrend. We had this situation here where the market had traded back higher, and then it dropped lower, and then it sprang back up, creating this consolidation here. And we had a break of this consolidation area. So it's just a consolidation, just a drop down, a push back up, we trade down, we trade back up, creating this consolidation here between this low and these highs here. And then the market breaks down at the end of November all the way down into that mid-December location here. So this is where we've come from in terms of this low, this high, this low, and then this high, which is the close on Friday. I'm going to drop down into a daily chart so that we can have a look at that. And I'm going to be primarily focused around the end of December going into the new year, because that's really where my forecast has been positioned in terms of what I was anticipating, what I was looking for going into January, and I was also mentioning February and March. And just to highlight as well, the crude oil in January, the trading in January for crude oil, so I'd say 70% of the time, January is not the best month for trading crude oil. And I've got some data that I can kind of back that up with in terms of my back testing and statistical analysis and all that good stuff there. February tends to be a better month for crude oil, and I'd say that 70% of the time over a 20-year period, if you look at the closing price at the end of February, so from the beginning of February to the end of February, if you look at the return distributions on crude oil over that time of a 20-year period, 70% of those at the time crude oil has done very well. So from 2000 all the way up until 2023, if you look at that closing price from February the 1st to the end of February the 28th, if you calculate the time, if you just look into that, you'll see that crude oil has been, if you add those up, you see 70% of the time crude oil has been, the close for crude oil has been great at the end of the month for February. January's been kind of 60% of the time over that 20-year period, you've had more losing months than you have winning months. So just to kind of throw that out there, really, and that's something you can find yourself, just by creating some type of statistical analysis. You can look at the closing price, the end of the month price, or the returns over the last 20 years, from February the 1st to the end of February, from 2000 all the way up until 2023, you will see that there's a 70% chance that the February's trading for crude oil is going to be great, and you only really have a 40% chance in January over that period of a really strong month. So February tends to be a much stronger month for trading the commodity of crude oil. But on this month, in January, we've had a really good month. So we'll just kind of break it down and take it from here. So my interest at the end of January, so at the end of December, so coming to the end of December, my interest, because we had this push up and we'd been in this trend down, I was looking for crude oil to trade higher going into January, knowing the statistics, January, February, and March. And my interest was the fact that we'd made this high, we'd come down, and we'd made a low here on the daily time frame, because that's what we're on at the moment on the daily time frame. We'd made a low. I was looking for some type of retracement. You'll see that shortly when I take off my when I show my annotations on the chart. I was looking for some retracement and then a confirmation that this market was gonna trade higher in the month of January. And my concern was this low to this high. So this is almost the end of December, and then we had this nice drop back down, and we this candle here, this daily candle at the beginning of January, dropped back down into this down close candle here. Okay, so this down close candle that we had on the daily, it was an offset for the market to move higher from this push all the way up to here. And I was looking for some stability in January. Can we hold above this level here? Can we hold above this level and trade higher? So take out this high and then potentially take out this high, just depending on the volume and depending on the volatility in the market. So what I'm going to do now is just take off my annotations. So I will mark up, we'll focus here in January. So I'll drop down into a smaller time frame to the hourly, and then we'll look at it from here. Now what I'll do is I'll highlight the annotations for us so that we can follow along quite cleanly. So what we had in my first forecast, the first video in this series that I put out there, what I said was, so I think I released that video just around I believe it was around the last week in December. It was the last week in December before we had this move here. And I was looking at the price and I was saying, my anticipation was that we would struggle to get above here at the beginning of the new year, and that we would trade down into this range, into this level here, and then from here I'd be looking for some conditional expectations for me to be able to test my hypothesis and trade in the direction that I believe the market was moving in, basically. And what happened was so we had the Friday, we had Christmas, we had the Monday, and then we had the Boxing Day situation here. So this is 26th of January, and you can find this in my first video and my second video. And we had this rally. So I was able to get into this trade here because I saw the volume and I saw the opportunity for the market to trade higher and take out this liquidity here that was resting above these highs on Friday and then on the Wednesday. So it trades above, takes out this liquidity, creates this high here at the end of December. So that's the month of December, that's the December high. And then we have the end of December's trading coming into the beginning of January. Okay, so I did say in my videos that I was looking for the market to break back down and trade down into this level here that I've got marked up on my chart, and then from this level here. So I'm just going to take out this because it helps me. But let's try again. So from this level, I was looking for some reaction. So this was my reaction point. I was looking to see how the market would react at this level here, this level. And what do we have? We have We have the Asian session here, which represents this shaded area, which is this rectangle area here that I've got marked up on my chart. This is the Asian session on the Wednesday, on the 3rd of January. And then we get into the London session, which is these candles here. The beginning of the London session, which is this candle here, this situation here where we have a small body but a wick, like a doji, I believe. I believe there's some type of don't quote me on this because I'm not the best at knowing every single candlestick formation, but I don't know if it's some type of dragonfly or doji, but I know what that is in terms of my own personal trading. So I know when I saw that exhaustion here, so in other words, this market trades down into the London session, and if you on my chart, I just want to make a quick note that this time reflects the New York time, doesn't reflect the UK time. My UK time is up here in this corner here because I'm in the UK, but all of my charts are set to a New York time. So this 3 a.m. in the morning, this candle is 8 a.m. in New York, which that's when I'm ready to start looking for potential trades in the market. So we have this situation. I knew what I was looking for anyway. I was looking for some reaction here, and then we got the reaction, and then I took some trades in here based off my conditional expectations in terms of what I look for, and we had a nice push, and this was a great sign for me. But I knew when we had this nice daily close, so this was the low, this was the high on that day, I knew that it was way too early to expect this market just to start to trade higher from trading up into this December high. I knew it was way too early. I knew that I had to wait for more confirmation of what I was looking for and the conditions that I look for to be able to test my hypothesis and trade directionally with my forecast. Okay, so this is the Wednesday, Thursday, Friday, and then this is the new trading week in January, the official trading week in January. We're on the 8th of January. We have this run here in Asia, a nice drop down into the New York session, which just represents this rectangle here in this shaded orange area. Just represents 8 o'clock in the morning, well, 9 all the way through till 2 o'clock in the afternoon in the New York session. So, and I believe I was looking at this area, and we're above this low. So this low is, so when the institutional traders entered the market here to push the market higher, I was looking on this particular day because it's quite a large displacement. It's traded all the way back down to this level. So looking at this key level again, I was watching and just waiting to see, are we going to take out this low here? And we never did. We got down, and then we had this candle here, this candle printed, and then we had this push away from this area. So I was like, okay, this is an area that it seems like the institutional market is protecting this position here, and now they've built another position here because we move away quite quickly. We move away, okay? So I'm just going to take this off to come back down over here. So that's the new Monday trading week, the new official trading week in January, and that's acting as some level of constructive support because we're above this level. It's holding market trades. We've got Tuesday price action, Wednesday price action, Thursday price action, and then Friday price action. And I was just in terms of how my charts are set up, I was taking trades here on the Thursday, and I was trading here again on the Thursday. So I got into a position here, and I got into a position here, because what I'm seeing now is I'm seeing volume come into the market, lots of volume. I'm seeing levels being protected, and I'm seeing in London primarily volume coming into the market. And I'm not just in London, but in New York, large volume. So a big push here, big push here. Again, large volume coming into the market. And this is what I look for in terms of confirmation. Is the market moving with volume and direction? In terms of my personal forecast, and the conditions that I'm looking for, the expectations that I'm looking for to confirm that direction. And I'm looking for volume to confirm a specific direction, especially on crude oil. So I'm entering trades here, I'm entering trades here. Just kill this a second. So we get to the Friday. So that's the week over. We closed down here. So we opened, let's say we opened here, but I'm using a different stamp for this. I'm not really using this, I'm using something else. But let's just say for trading view purposes, this is where the market, it opens on that Monday, and then this is where we close on the Friday. So it's not too much of a distance. So it's quite a lot of volume going off, but also it's a very small body in terms of the open and the close. Just a very small little area here. So it's only tiny. It's only like this type of candle. Okay, so lots of wicks above, wicks below. So we come into this week now. So this is kind of January starting to warm up in the market. We're starting to see just a sideways type of trading in here. So I'm taking trades in these areas because I know what I'm looking for, and I'm seeing how the market's dropping down and it's pulling away. This is a no trading day for me, and because I know what I'm looking for, and I've set my charts up in such a way that I know exactly where I need to enter trades and to exit trades. All of this is beautiful to me. I'm saying this, I'm thinking, wow, this is amazing. This market is confirming the conditions that I'm looking for are showing up in the market, and it's beginning to confirm to me that my forecast is now, the market is aligning with my forecast, and there's no greater stimulus than that, than you're forecasting a certain type of behavior in the market, or in terms of a certain type of direction, and the market is beginning to show you its hand. It's beginning to show you its hand. It's beginning to show you and align itself with what you've already anticipated, with what you've already studied, you've looked at, you've spent a lot of time analyzing, you spent a lot of time going through different scenarios, you spent a lot of time thinking about different outcomes, and this subset of information is within your trading system, or it's within your trading plan, and you're looking at it as a subset. So you're analyzing the week, the days that are going by, and you're saying, okay, this is really starting to align with this particular subset of my trading system, or with my forecast. Okay, so within my forecast, I've got various, let's just say I've got a subset of A, B, and C, and within those subsets, I'm looking for conditional expectations. Okay, I don't have 50 different subsets. For me, A, B, and C is enough, because within A, B, and C, within those subsets are going to be specific conditional expectations that I need to be able to gauge the price action and the direction of the market. So let's say I'm looking at my subsets and I'm saying, okay, subset A, this is as I go through it and I look through that data, I'm saying, okay, this is really starting to align with this particular subset. So what I'm beginning to do now is, within that data that I'm processing, I'm saying I'm gonna now begin to rule out condition B and condition C, because I don't need to rely on that. I don't need to keep going back over that data when the market is beginning to show me it's revealing itself in this way. And this is what I started to see in January, and I was already prepared for each of those outcomes anyway, but I was just looking for which one is it going to be. And in these situations that I'm looking at, I'm seeing subset A begin to show me that, look, this is aligning with what you've already anticipated. So this was a great trading week for me on crude oil. Just with the trades that I was able to take here again. And when the market's dropping down here, I'm not afraid, I'm not scared, I'm not like anxious or anything like that. I'm just patient, very patient, and I'm just watching the price action, and I'm just waiting to see those confirmations outward themselves. So maybe I'm if I'm getting in trades here, maybe I've held, because I do tend to hold these trades for a much longer period, especially on crude oil, because I like to trade it from that holding position. So whether I'm taking shorts, whether I'm taking sells, and then just build my position into the actual direction of the market. So when it's trading down here, let's say I'm getting into the market around here, and it's trading down, I'm not afraid. I'm not thinking, oh, I need to get out of my trades or anything like that, because I know where my parameters are. I know where I need to be more risk averse. So here I'm just taking on more risk, and I'm just managing more risk. If this market started to just really decline, and I saw that these areas really became a target, then I would begin to scale back and just manage my risk from there. But in this situation, I'm just managing my risk through this position, adding to my position here, and then the market's just confirming again. It's just showing me, look, this is where we're going. I can see that as a trader, so I know what's happening. And then we get the new trading day Thursday. Market drops down again. It's giving me another insight into what it wants to do. Very similar to what we're seeing here. So we're seeing it here. Let's just so here we see it. We see it again here. We've seen it again. We've already seen it down here. We've seen it. So that's 1, 2, 3. Perfect. Just perfect confirmation. That's the only way for me to describe it. So we've had all of this move, and we're moving away from this key level. We move up into this key level here, and this is now the end of January. So this has kind of been the move in January from here all the way here, in line with my forecast, because I was saying, if you watch part 1 and part 2, that the market was going to trade down in December, at the end of December, and I was looking for some movements around here for the market to trade higher in January, and already that's happened. Already we're here at this. We're broken above this key level, and if we go down to a 4-hour chart, look at the volume that's been coming into the market. It's much cleaner to see on a 4-hour chart. Like here, look at all this volume. Again, lots of volume and direction. So each time this market's given volume, here, it's confirming direction, and then we have some consolidation around, and that's normal. We get some. Sorry, just gonna take this. We have some consolidations around here, which is very normal, but then it's followed with volume, some consolidation, volume. Some, we drop down, and then lots of volume coming into the market, confirming my direction. So pretty pleased about this. It's all backed up, okay? And you can see in part 1, in part 2, exactly before this happened, what I was looking for, what I was looking at. You can see within part 1 and part 2 where my thoughts were aligned, and my sticking to my forecast, not predicting the market, never predicting where price is going to be, because price is a stochastic process. It's changing all the time. It's moving all the time. And as a trader, I don't believe in trying to predict anything in this market, but much more working with probability and aligning myself with probability, and also forecasting the market. So forecasting coincides in my trading plan with probability, okay? And the specific conditions that I look for in the market to confirm that forecast. I think a forecast is a good way of approaching the market, rather than trying to predict every single outcome, or create some form of prediction algorithm, because these markets are very dynamic, and they can move with a lot of volatility, and there are things that are out there in the world that we don't see, that we don't know about, that can shape the market very quickly, that can change, that can heighten the volatility very quickly. And I think it's much more, I'd say, robust to have a forecast of where you believe price is going to gonna move, and have a forecast over a period of time, as opposed to 1 day, 2 day, 3 days, but to have a real quarterly forecast of where price is going to move over the next 3 months, and then looking forward, but then looking to the market intraday, so daily, weekly, to see how your forecast, to see how the price action is shaping up with the conditions that you're looking for in that forecast. And for me, that's my approach to being a successful, a successful trader and a successful investor, within these financial markets. So just wanted to conclude that really, this is the final video of this 3-part series. And I just wanted to provide an overview of what I was looking at, what's happened, and where the price currently is, and what my expectation is now moving forward. I will continue to trade this instrument. Just going to go back down to the daily. So still bullish. I'm not in any positions at the moment. Personally, I would be looking for some type of retracement. And what I'm looking for is some type of retracement back down into this area. This for me represents a new area of interest for taking buys. And I would like to see the market drop back down here if it can do that. If it doesn't drop down here, I won't be taking any more buys, because at the moment I just feel, because we've had a big run here, and then we had a big run on Friday, I would like to see some type of retracement, some slowing down, because that will help me just gauge, is this market going to continue to push higher into these levels that I've got marked up on my chart. So this level here, this 85, and this high from December. That's the high from December now has been taken out. So we've got a new high for January, and then we've got these highs here in November. So I would be looking to take profits up here, but I'd need to see some retracement back down into this execution area for me to be able to get back into this market. Until then, I won't trade it until it gives me a clean entry point around here, and then I'll be looking to trade and take profits up here. So I hope you found this video insightful and helpful. If you do have any comments just in relation to the things that I've shared in this video, how I'm able to look at specific markets and go through a forecast over a period of time, that might be something new to you. You might not have come across that on YouTube or on the internet or in any trading forums or blogs or anything of that nature. Maybe you've not heard anyone talk from this angle before. If you would like to know more about that, then please feel free to drop me any comments, and I'd be more than happy to share why I approach the markets from this type of angle. I know that thinking in 3 months in advance it can seem really strange, and it can seem just, why would you do that? And I understand that. I understand there's so many different approaches to trading these financial markets, and really it's down to what approach works best for you. And for me, looking ahead with hindsight, with insight that I have, and being able to track that and look for those conditions makes sense to me, rather than just taking what the market throws at me every day, every week, every month. I like to have a grasp on what I'm doing, and I like to see ahead, not like a crystal ball, but just I like to be able to look at the market and say, okay, where do I think this market's going to be over the next coming weeks, and so on and so forth, and then break it down into smaller chunks, into smaller problems, and then look at the data that's being presented to me on an intraday basis. Some markets work really well for that. Some markets, unfortunately, don't work as well for that. For instance, I give an example for the yen pairs. The yen pairs are very volatile. They're very loud. And yeah, I could go into a lot of information around those pairs, and just in terms of, I wouldn't use this type of approach on the yen pairs, but on other different markets, because of the way the time series works, I'm able to use these types of approaches. It doesn't work on every time series data. There's just a cluster of data sets that it really works hand in hand with. And once you find, for me, now that I found those data sets, it's just taken me to a whole nother level. So that was, just wanted to share that in closing. Yeah, so if you have any questions, any thoughts, if you did like this video, then please feel free to drop me in the comments. Like I said, give me a like, subscribe for future videos. I'll continue to keep putting out YouTube videos as much as I can, as much as I have the time. And yeah, thanks for your time.